Well, hello folks, I'm L.A. Little and this is today's short take. One of the things we saw last year into the year is a relative underperformance of the NDX. And you can see that here as it rolls over. It never got over a swing point high. It was the only index in December unable to get over the swing point high. And if we look at what's inside of that, we can see why that's the case. Here's Apple Computer. If you look at this on a daily time frame, this kind of looks like an ABCD type structure taking place to the downside, right? Not quite complete, almost complete. Gets a bounce up. Now it's kind of rolling back over again. But if we look at it on the weekly, right there, you can see it more cleanly that you've got the potential set up to take this thing lower. It's a fairly clean view from this perspective. And where would it take it? It would take it back down into these lows. Apple being such a large weighting, the big move up in this index was really Apple making the move. I mean, from 75 to 117 is a huge move. A large part of the NDX contained here in Apple. If it's doing an ABCD down, then of course that's going to weigh on this index, and without Apple moving, it has a hard time moving up. Now the reverse view of this is Apple may be just consolidating before it moves even higher. Those are the kinds of questions as we start out the new year that's going probably to be answered here in the first couple of weeks. You got earnings coming up. I chose Apple as an example. We'll look at a couple of the other ones as we get going to start the new year here. But in general, NDX, the weakest of the indexes, the one to be watching here at the beginning of the year. And I suspect those large cap, big technology companies are going to be the ones that either sink this index or make it swim again.